So as usual, we're gonna start with the daily chart. Today is Friday, and you can see how yesterday we had a bullish candlestick trading away from this inefficiency here. So I mentioned yesterday, after we had this new day opening gap here, we were trading lower into the lower portion of the new day opening gap that was not traded. And then I mentioned if we trade higher, then we'll be headed into this high here together with this daily high, and most importantly, this inefficiency here. So I'm gonna jump the gun today and highlight this inefficiency here. So this is the daily inefficiency, and you can note the day that I'm interested in that inefficiency, 28th of August. We're remaining with today and then Monday, and then we're gonna be done with August. So I'm gonna extend this to, let's say Monday's price action, and then I'm also gonna notate the midpoint of this inefficiency right there. Extend this. So if we trade into that inefficiency, then I'll be interested in the quadrants, the way I was interested in this quadrants of this inefficiency, and then we're gonna judge if price wants to trade into that high and this high here. These are relatively equal here. So I think it's Friday. I'm gonna look at what the week has done. So this was Thursday, Wednesday, Tuesday, and Monday. So Monday we had the low of the week here, and then starting from Tuesday's price action going into Wednesday, we started pushing higher, trading through these inefficiencies here, and you can see where we closed. We closed here on this was the Wednesday, and then yesterday's price action. You can see the bullishness trading outside that inefficiency there. So we're in Friday price action. I'm gonna be annotating this yesterday's high. If we decide to start trading higher, we're gonna run into that yesterday's high. We've already run this high out. This was last week on Thursday, so we'll be looking if price has an interest to trade into this last week on Wednesday's high, and together with that inefficiency there. So without outlined, I'm gonna go straight to a 1 hour chart here. So let me extend this. So these are the levels. So this is Friday here with the daily delineations here. Today is Friday. Yesterday, you can see yesterday's price action here. We ran higher, retraced back into that new day opening gap here, and then eventually we retraced that daily inefficiency and closed right there. So I've talked about if we start trading a little bit bullish, I'll be still expecting price to run into that yesterday's high, even though we've gone above it. This candlestick here is the high is 29,642.4. So this one here is 644. So 642.4, 644.1. So we've gone above that high by 2 points. So that high is still of interest. Price does not really trade into a high with 2 points and then leave it at that. So if we'll have an interest to run higher while we are using the tape reading methodologies on the lower time frame 5 minute, then we're going to be expecting price to run to that high. So with that said, I'm going to look at a 15-minute chart now. So this is what I was looking for yesterday, the sell side here. We ran into that, and then you can see after running into that sell side the whole day, we ran higher. This was still in London, took out that high, this high first, and then that one, and then we retraced again lower, and then we ran higher and closed up on the day. So let's look at price now on the 5-minute time frame. Now on this 5-minute time frame here, I'm gonna extend this inefficiency out to 31st, extend this new day opening gap to at least 30th, and then the quadrants, and here we go. Oh, this is supposed to be behind, let's say 6th, 23. Okay, it's right there. So I'm going to leave that new day opening gap here. I've stretched it out. New day opening gaps are they can be looked forward like in 3 days. They can be useful for price in a 3 day lifespan. Let me call it a 3 day lifespan. That happens with the opening range gap for regular trading hours, but I do not use the regular trading hours opening range. I do not need that in my model here. So we've been trading higher anyway. We closed here yesterday on yesterday's price action. We have opened up a 0 GMT today here. We've tried to have this momentum lower, but we've ran to that high, and you can see we've ran just 2 points above that is yesterday's high. So let's look at a 5-minute chart now. So you can see here we opened up at 0 GMT. We've had this a little bit run lower, and then we started gyrating higher, and now we formed relative equal highs here, and then had a decline here. We ran above that high here with the wick, you can see here, and then we've been trading lower since. So the time right now is 7:39. We're 39 minutes past 7. So I'm gonna start by annotating the midnight new opening price, obviously, and that is around on this candlestick here. It is 7. So that is light green. Okay. So in that regard here, we have the Asian high here and Asian low down here. So if we're gonna be bearish here, the way it is trading here, then we're gonna be trading into this range here. There's nothing really interesting here. There's no gap. There are only these wicks here. So we have relatively lows here. So let's add this here. So especially this low together with these ones here, they are too smooth. So we might have price trading to this low. So today this price action here is a little bit difficult. I'm not gonna lie. It's not really like an easy run on liquidity. It's a little bit difficult, and when we have this kind of price action here, all we're gonna do is have a little bit of patience, see what price wants to do, and then maybe we'll get a trade. We'll it will be fine. It will all be fine. So compressing it out, here you can see the 15-minute. I wanted to extend this here to around 30th, and this quadrant also. I'm still setting up my chart, so I'm gonna extend this a little bit like that, and then there we go. And then here we have a daily chart, and here we go. So I can have the overview of what price wants to do or where it's headed from a lower time frame, 5-minute to a 15-minute to a daily chart. So this 15 minutes here, I switch it with the 1 hour when I'm looking at specific things. And yeah, so I'm gonna delete this here because we were done with this, and then I'm gonna annotate yesterday's high. So yesterday's high was formed in the afternoon session, and there we go. So I like getting into business. I don't really like talking a lot. Don't really have a lot of encouragement to get on people. That is ICT's work. So all you're gonna do is just do this every day so that you can get it right. So we have yesterday's high here on the 5 minute. We're looking at 5 minute now. We have yesterday's high here. We just went above it a little bit over 2 points above that 641 level, and then we've been trading lower here. Immediately right here on the midday new opening price, we have this CB here. We referred to that CB, we referred to that opening price, and then we're trading lower still. So my eye has gone directly to this low. We can expect price to trade lower and take out that low, because now that we are formed a higher high here than this one here, this whole retracement here trumps on the bullish momentum that was in place. So I'm not saying that we're done with the bullishness here. We can take that sell side out and then start trading higher. I mean, that's what I can foresee here. Take out that sell side and then start trading higher, especially that inefficiency here that is open right here. We can refer back into that and then maybe take out that high. If we trade lower into that sell side and then resume lower prices, then we might even trade into this Asian low. So I like the fact that we are trading in the middle point of this Asian range, from this low here to that high. That's our dealing range. That's the Asian range. So my eye has gone to this low here, and I'm expecting price to draw down into that sell side. If it doesn't, or rather if it does, I'll be expecting price to start having a reaction off of these lows here. These are too smooth. They're too smooth. So after taking out these lows here, then we'll see what the price has in store. So looking at the 1 hour chart here, so you can see from yesterday's price action, we've been trading higher, but we've been having a lot of retracement. From yesterday's New York session, we had this run higher, a retracement here, push higher, a retracement going into 0 GMT here, and then we push higher again, take out that high, and now we're trading inside a retracement. So that's why I'm expecting a little bit of weakness here before it starts trade higher. If at all it will trade higher. So because price this low here, and then we have this push higher, trading after that high, and then we've gone again lower into this low. My eye again goes into this inefficiency here, this CB. I'm just wondering, if I were to be trading Asia, I've been looking at obviously that yesterday's high, we went into that, we formed relative equal highs here, that one and that one, and then we've had this move higher here that takes out those relative equal highs here with the wicks, and then we've had this retracement lower and then taking out that low. So these inefficiencies here will have been an interesting study to see what the price runs after these highs, and you can see it ran after those highs and then retrace lower. So that inefficiency there is interesting to watch. So what matters is, can this inefficiency here be a point in price action where it can define our narrative? First of all, we want to see what time was this inefficiency formed, that is 535, that is 540, and that's 545. So 550 is here, that macro, and you can see 550 we have another inefficiency here. That's 55, that is 605, and then 610. So inside this range here we have this inefficiency here that is inside this straightforward inefficiency that we've determined. And also my eye went into this week, so I can use this internal range inefficiencies to define the narrative today, but they're not really straightforward. Straightforward, I mean, they're not like open, and it can be a difficult trade because they are inside this range. So I'm gonna just be looking at what does price do after it takes out this low. So I'm gonna look at a 15-minute chart here now. We've just opened a new 15-minute candlestick, and you can see the reaction on this 15-minute chart here. We formed this low here, had this push higher. You can see the reaction here. Ran higher after yesterday's high, and then now you've been trading lower. So I can still expect price to trade into this inefficiency. On the 15-minute chart here, it's very clear. We have a buy-side imbalance as an efficiency down here. So this can be a point in price action where price can trade to and offer sell side through that buy side imbalance. So we can trade lower and offer sell side through that. And that's why I haven't traded this sell side, and we can expect price to start trading into that low. So to be specific, this low is 29,571.5, 571.5, and I think that low is this low. Yeah, 571.5. So it's this low. So this low 571, we're trading at 580s. So let's see whether price will trade into that sell side. We're mainly with 1 minute, and then 750 is gonna be in price, and let's watch what it does with this macro here. So in this range, after taking out this high here, I've mentioned this inefficiency here. And then down here, we have this CP from the opening price. And then at the same time, we have a very small inefficiency here. So I'm not gonna annotate them yet, but they will be interesting to me if price trades after this low. Then will be interesting to see what price does next. I've mentioned this buy-side imbalances and efficiency on the 15-minute, and after we took out that yesterday's high here with the wick, we formed a nice swing high, and this is the kind of swing highs that have an effect on momentum. An effect on momentum means that we can completely change the momentum from what it has been doing. been bullish. You can clearly see here on the 15-minute, been bullish, and then we had this drop here, trade into that high, and then we have another drop forming a perfect swing high here. So this can send us into these lower prices, and you can see we've had one up close candlestick here, and then started having down close, huge wick went through it, and now this area here is just too small. So we can expect that 571 area to be revisited. So you're 2 minutes into 750. So we're currently at 582. Another area of interest on this daily chart is this candlestick wick here. Yesterday's wick is good, but this wick here, just look at that. So this week here, that is from last week on Wednesday, that level there, especially that midpoint, that 29,574.21, that level is very interesting. That's 574. We have 571 here, so we can draw lower into those levels. Yesterday's week here, I'll just annotate it using this 15-minute, and we'll see where that lies, because it's the close here, the high, and that is 604.8. So these are the kind of levels that price can refer to. So that 604.8 level is right there on the opening price. 604.8. The opening price in itself is 605.6. So this area here, that opening price, especially that opening price, is a very interesting area. And look at that area here. We have the inefficiency that comes to the direct eye is that CB together with this one. So which one is more significant? I can say this one here with the opening price is more significant. We went to the top of that inefficiency. Look at the bodies, did not trade outside that opening price, and then they're trading lower. So with all that said, now this inefficiency here can be justifies as a point of interest. And this is olive drop. Then extend this out to 9, and then plus the midpoint of that inefficiency. So we've seen how we come about these inefficiencies here and why they're important. So we had it here. This candlestick here is 655, and this is 7. Immediately, that candlestick starts trading. That's midnight New York. So we had this CB here with that 655 and 705 candlestick, and the 7 candlestick making that inefficiency. We had this run higher to the midpoint. You can see the wick referred back into that opening price, and then we've had that reaction there, reaction lower. So we can expect price to take that sell side with the kind of reaction it has had here. So I talked about this week here. Let's annotate this area here, and you can see the midpoint of that week right there at 574.4, and the midpoint of this daily week is that 574.1 level. So this 574 level is very important. It's a very important price point. So the way it's behaving here, I want to see it run to this sell side. So what 574, that 574 level. You can see the reaction here with price. We bring to that 574 and then it's pushing back higher. We remain with around 2 minutes. We're gonna open up a new 1 hour candlestick and a new 15-minute. So it's still kind of like not kind of like, it's still engineering liquidity sell side. So we can still expect price to run through this 571 level. So this week here is also at the midpoint of this range, this low here to that high. That candlestick is on the midpoint of that range. So that week is important. So we're trading at 577 now. This candlestick here has reached the low here is 573.9. So we've touched that 574 level. So this is still engineering liquidity. This is sell side, and we still want to see price head into these lows. Oh, my throat today. So if closed here, that 1 hour is in, that 15-minute is in. We have a very it's a small week, but it's a measurable week. So I want to see the lower prices. There's a nice run to 574, 573 now, and I want to see that 571, and I want to see price go through it. Price keeps on retracing higher. We've not gone through that low, so you can see that reaction there, taken out that small low, and then we've had that another push higher. So this inefficiency here, this wick here, is the one acting on like a speed bump before price gets into this low. So I want to say it, trade that sell side. There we go, 572, and I want to see it trade to that 571 low. There we go. So we've ran after that sell side just the way I've said it, and now we're trading at 569. So that sell side is out, and I wanted to see how does price react after it has gone into that sell side. So if you can see a 15-minute, we're so close to this inefficiency here, and that's what I want to see price trade to. So let's see whether it can get to 560. So anybody will be selling that 580 level. Those are this can be a 20 point opportunity to 560, 29,560. So we've ran that sell side out, and you can see how price is reacting here now on that liquidity pool. This candlesticks low, the one with the huge wick. Actually, let's annotate this wick here, this midpoint of this wick. That is 574.3. So this candlesticks low, we can expect price to trade into that low, and this low is 563.1, 563.1 down there. So you can see we are trading lower. We closed here, still trading lower. We're trading at 566 now. So another thing is, you can see where this candlestick here closes. It closes inside the lower part of that midpoint of that wick. So that is also important for lower prices. Is important for lower pricing. So if we've gone lower, we've gone below this candlestick low that has just been formed. We're trading at 566 now, and then we can expect 560s. So with the way prices are behaving here, we can just trade lower without any interest of a retracement. There we go. We've traded into that 563 level. The exact low is 563.1. and this candlestick's low is 563.3. So that's a nice run to that low right here. So for 580, 560, we've not reached into 560 yet, but it's gonna go there because we have that 15-minute inefficiency where I talked about this here, and it's the momentum here for me. The fact that we went above this here, this daily high, yesterday's high, it might not have an interest again to be trading a lot more higher, other than trading back into an inefficiency. This inefficiency also is an internal range liquidity pool, this range here. We did not have a clear inefficiency here on the 5-minute, other than these weeks here, this week here, and this week. This week here also has a volume imbalance on the low. You can see the closing and opening price of this candlestick here is there's a separation, there's a volume imbalance. So this week here is also important in where price is gonna reach for, and those kind of liquidity ideas. So this week here, from that close to that high, that 554.2, if we have price trading back deep into this inefficiency here, then we'll be headed into this week at the midpoint of this week. So that is 554.2. So that week is also of interest. So we've gone below that sell side. So sell side is out. We might as well delete this, and I will have that point annotated. So before I actually delete that, I'm gonna be taking this screenshot first. I'll take a screenshot, and then this is the macro. Indicate no object. An arrow. Then I'm going to put this arrow here on the first macro that comes in at 750 right there. So this one here, this is that pale green, and now I'm going to be taking this screenshot. When price runs a liquidity pool, it's important to take a screenshot so that you can keep track of the time it did it and what aspect of price were you looking at when it did it. So all of this here is of importance. So we're trading deeper. We're trading at 562 now. So 560, there we go. We're trading at 559 now. It's a very nice run lower. And you can see the reaction from here. So from 580, 560, very nice 20-point run. There you have it. So I'm looking at the way price is behaving with this week here. The high of that week, the midpoint, which is annotated here, and that low. That low has that volume imbalance. So I'm going to be seeing, does price has an interest to just go through it and trade into this low? So after taking this screenshot, so I can gladly delete this here and have only these points highlighted. So if we go past this inefficiency here, then we can definitely trade into this sell side. If we trade to the lower portion of this here and close past the midpoint of this wick here, then that sell side liquidity here is an interesting area for price to trade to. And this law is the Asian law. So speaking about it, this law here is 529.9, so that's around 530. 530 plus a 2-point spread, that's 532, plus 20 points, 552, and 552, the midpoint of this week is 553. So that's an interesting way to determine if we do that. Then if price want to run that sell side out, you can have a sell around 552 level. So we've devoured into this 15-minute range. Let's make this a little bit large. So this 15-minute efficiency is also important, and I want to look at what the midpoint is, and that midpoint is 552.6. The midpoint of this week is 554, so that 550 level is also of importance. So it's very interesting to me on the kind of liquidity that I point out to, and the way price draws into them in this kind of in this time period is interesting. I come in front of price, I get this price action here, I get that we've traded into this high here, and where are we going to? We're trading lower. I mean, beside momentum, I talked about this point in price action, and I wanted to see price go to it and through it. And you can see what it has done here using this 750 to 810 macro. Now it has been a continuation of this weakness. So if we'll still see weakness, I want to see price trade into this inefficiency here and trade on the closing basis below it. So we've opened up a new 15-minute candlestick. So we want to be gauging, does price still have an interest to trade lower, or do we get a retracement? And if we retrace, do we go above this week here, or do we go into that week and then get some more weakness? So far it has all been a weakness here. So we've not gotten any inefficiency here. We've just opened this 15-minute, a little bit of retracement here, and we just pushed lower. So we are still getting weakness through into 557, and most importantly this 15-minute inefficiency here. somebody in my building who had just woken up and they're just playing loud music. This is really not a building to be working from home, is it? So, even though we are really on our road to weakness here, I cannot be going short right here, and the way it's behaving here, it might just have a huge retracement on me if I go short right now. So even though the momentum is here is a weakness, I mean, we had this bullish pricing from Asia, and then going into this area here, we have weakness. This is not the kind of marketplace that I normally expect. I normally expect the momentum that is coming in from Asia is the one that is going to be in going into this time period here, the midnight new opening price, and going into the London Open. That's the kind of momentum that is very easy to trade, and it's very objective. You can point out to where price is headed. Very easy runs on liquidity. But when it's trading like this here, and especially when I look at a 1 hour chart, so I'll delete this here first. When I look at a 1 hour chart, you can see the deeper retracement here from yesterday. Deeper retracement trades higher, deeper retracement trades higher, deeper retracement trades higher. So I am very skeptical about buying around this area here. So with that said, if you look at this 5 minute chart here from yesterday's afternoon session, it's just a run on buy side and then a deeper retracement. It runs buy side and then a deeper retracement. This can be the last run on buy side, and then we have this run on this low here. It can be, but then I'll expect price to just not do this minimal movement here. I want to see a run lower with strength, but the way it's behaving here, trading around that 560 level, we might just have a bigger retracement before it even trades to that low. So I don't want to be a victim of deeper retracement. That's what I'm talking about here. So I want to see how it reacts to that midpoint of that week here. So look at where we've closed on that candlestick. We're trading at 555 now, 29,556. So far inside this run lower, we've not had any up close candlestick. We've not had any retracement. And if this is our range, this is our Asian range, then I talked about how this week here was the midpoint of that range, and that week in itself is important in determining whether we are going to go to these lows here or we're going to go higher. So this PDRA plus this PDRA are going to define the narrative that we're going to be having here, especially this one here that is on the midpoint. If we have this retracement here and we're going to be trading lower, and if it wants to be weak, I don't want to see price trade a lot into this week. So let's just annotate this here. So this is gonna be light slate gray, and then I'm gonna extend this out to 9. So you can see that inefficiency. That inefficiency is that weak together with that very small volume imbalance, but it doesn't matter because the close is right there at the top. So after we had this run lower into that week, then we start trading here. I talked about that sell side. You can see how we ran through that, and the midpoint of that week, you can see how price is reacting there. So I don't want to see a deeper retracement that trades into the upper portion of that inefficiency there if we want to be remaining weak. And at all, I don't want to see even a retracement back into that inefficiency there. Then that will be good for lower prices, and we can comfortably trade into these lows here. So if it closes below this midpoint of this candlestick here, then I'll be annotating this sell side. If only we close below the midpoint of that wick, then my eye goes directly into that sell side. So we've touched that level. We're looking at back at a 15-minute time frame. You can see the run lower here. It's beautiful, right? Trading back into the inefficiency. Very nice. So that's a nice reaction lower. We have 2 minutes still inside this wick. So we're trading right there at 550. I talked about having an interest to sell that 552 level. So remaining with less than a minute. So we're trading at 550 now. Let me remove this here. So we've had a push higher. See that? Had that push higher going into the close of that 5-minute candlestick. Closes. We've not closed on the lower portion of this week. So that is interesting. So this one up close candle that we've had so far. So you can see the reaction right there from that inefficiency there. So that's a deeper discount. So you can see the reaction there. So we've run lower, we've taken sell side, and I wanted to see price close on the lower portion of this inefficiency, but it obviously has not done it. I mean, it can do it going into this, the next a few candlesticks, but it must do it first, then I'll be interested in that sell side. If it does not do it, then we might have a deeper retracement, and that deeper retracement might as well go into this week here. So if we trade into this week like the way we are doing here, and let's say supposedly we are weak and we're going to attack this low here, I don't want to see trade to the upper portion of this week and spend a lot of time inside this inefficiency. That's something that I don't want to see it. if we are really weak. But if we are really bullish again, then we'll just go straight through that inefficiency and then get back into this here. So neither of that has happened. So we're looking at price a little bit more. So in itself, this is a weakness here, this weakness. And if I were to do the gun gun on my head thing, what I will do right now, I will be selling this with that retracement there back into around that low 563. That will have been a nice sell. And you can see the reaction there, beautiful, right? So this is the second time we're making reference to the midpoint of that inefficiency, so we might as well as trade into these lows, but I'm still waiting on the closing basis. We're back up to 560 again. So the time is 8:28, 28 minutes past 8. Now we are on the lower portion of this range. And now we are making reference again back into that week, the low of that week. So look at where we closed again. Two up close candlesticks here. So does price still want to continue with this momentum here? Or do we just assume that momentum and then start trading higher? So we've closed this 15-minute candlestick here. Look at this 15-minute. And we've had that reaction lower. So that's an interesting reaction here. I've talked about how we anticipate price trading through these weeks. And now it's not any different here today. Look at the open here. We've ran directly the midpoint of that week and it's going to go through it. So that 554 area is a huge area of interest for this price action here. So I still believe momentum is behind this run lower, and with this kind of price action here, the best it can do is go below this trade and close below this wick here, and then run to that sell side. And with the way it's behaving here with the bodies are not closing, are neither closing inside this wick here, but you can see the reaction here. So we're still stuck on that 560 level. You can see the movement lower here now. Made reference again, the midpoint of that week right there is pushing higher. So you can see the reaction from that week. Goes through that week, reacts higher, touched here, went higher and closed higher. We've been making reference to that week. That level is 554.5 once more, and then we've reacted higher. So remain with 2 minutes, and then this candlestick here is gonna close. So it's gonna be interesting where this candlestick here closes. So if I'm gonna be selling, then I'm gonna be expecting price to run that sell side out. If we're gonna be buying, I don't see an opportunity for buys here unless we start trading back into inefficiency and trade on the upper portion of that inefficiency there. Otherwise, right now everything here is bearish. So we've made back again reference to that low. That was interesting. And look at that close. Still not yet on the lower portion of this week, but it's weak here. It's just weakness. So we're gonna be a little bit more patient and wait for it here. So we're running lower here. 560 now. So we've gone completely below these candlesticks low on the 15-minute chart. Very nice. Now look at the reaction here. This is not really the kind of momentum that I would really expect on my position, honestly speaking. It's really not really going. I know we're in a bearish move. We're gonna be trading lower. Now that it has not really had an interest to trade it back into this week, and you can see the reaction here. But we've had a swing high. And now I can expect them lower prices, but we must close below this week here. So we're going below this low here again, trading on 549 now. That's nice. So we're making reference to that volume imbalance in a short while. So with the way price has behaved here, with the way we've had this swing high here, we might as well now annotate this sell side liquidity here. I've been talking about this here. I've been talking about how I want to see price trade to the lower portion of this wick, and you can see the weakness here. So this is white. That's okay. So this is the sell side liquidity pool. Then I want to be anticipating price to trade to. So now we can look for the sales, and looking for the sales, we must have a retracement back into around this level here again. That's a nice swing high right here. And now we've pushed lower, and you can see the reaction from the midpoint of that week. You can see how they dumped it. They've dumped it lower. So if I were to be a seller at that 560 level, well, it was making reference to that 560 here. So 540 will have been a nice 20-point run, even though we've not traded down to 540. So we're at 542 now. So a point to note again, we've traded through this 15-minute inefficiency. We've traded fully through it. And you can see the price action here. I talked about this week, and I talked about how price normally trade through these weeks. And today is no different. So we're remaining with less than a minute, a few seconds, then this candlestick here is gonna close on this low. And you can see we're trading on that very small volume imbalance here that I mentioned. There we go. And now that sell side here is valid now. Very valid. So this sell side again is the low here is 529.9. So that's 530. A 20-point run to 530, then will be there will be an interest for price to be reacting at 550s. So we've gone through that week here. We've closed on the low. We're trading at that very small volume imbalance there. You can see the retracement here now. Well, I've seen price do crazy things. Now that we are remaining with 10 minutes, and then we're gonna have the 9 o'clock that welcomes in the London Open. After price has done this kind of retracement here, I just have to wait for the 850 macro. I don't want to jump in the gun, and it can have a deeper retracement and then eventually trade lower. So I'm waiting for that 850 macro, and then we're gonna see if we can have a sell trading into this sell side, that 530 level. So price is still pressing weakness here. So we have less than a minute. This candlestick here is going to close, and then we're going to wait for 5 more minutes to anticipate the 850. So getting a little bit more retracement. So let's watch what this candlestick here is doing. So a new 15-minute also has opened up here. And we're watching also the same concept of the week. We're expecting price to run through that, and you can see here. So very nice decline here. We're trading at 542 now. So we're still waiting for 850 macro that welcomes in London, and then we're gonna see the reaction on price. So with the way it's behaving here, that sell side here is gonna be taken out. So we are still on lower prices. This has been a very nice rejection lower from 580s trading down to 570s, trading down to 560s, and now we're at 550s. Even though it's not really like a protracted price action, but the momentum is there. The momentum is weakness, and we've seen it from the rejection here, midnight New York. Get that rejection right there, that inefficiency. You trade lower away from the. Look at the sensitivity on the midpoint there. Trades lower. Trend to this inefficiency. You can see the sensitivity on the midpoint trades lower, and right here trades lower on this PD array that I've annotated. So we're remaining with 2 minutes. Then the 850 macro is gonna come in. Then we're gonna see what we have. Honestly, what I want to see right now is a deeper retracement than what we're expecting here, because everybody's expecting it to run that sell side, to ram that sell side. It can, but at least let's have a retracement back up higher and then trade into that low. Or another thing it can do, it can just trade lower into that sell side and then have that retracement and then attack that sell side again. And I think that's what it's likely to do. We might attack this sell side first and then trade higher and then attack it again and attack the low that is going to be formed below that sell side. Or the other thing it can do, you can get into that 850. It's coming in less than a minute now. We can have that retracement back even into this inefficiency here and then trade lower. That's the modest way it can do it. So here we go, we have this 850 candlestick. And you can see how it's behaving here. It wants to round these lows here and trade lower. So we're trading at 543. 20 points from 543 is 523, and 523 is down here. So that's just a range that's outside the realm of where I would expect it to trade to. So it's better to wait for that, for the retracements, and then get the momentum lower. Or if it's not going to retrace here, the way it's behaving here, it might just run that sell side, and then if it retraces back, we'll be looking for a sell that trades again into this sell side. So I like the way we closed on the lower portion of that level here. That was nice. Then we had this up close candlestick here. We did not trade back into that level here. We have a very small gap on the midpoint of that wick here. And then we've opened up this candlestick here, this 845, and it's trading lower. And now we are trading here at 541.6. So I'm still expecting price to trade lower. So we've touched that 540 level. What could have been the seller at 600, 560, I mean. 540 is right there. 20 points. So we've been posting in weaker prices since I came on this since I came to look at price, what we have today. So you can see the reaction there. Trading at 536 now. Nice. So we're running higher again, turning back into this range. So you can see where this candlestick here has closed, this 850. So we are at 855. So there's still lower pricing here. So I said this low is 530. So 540, 550 will have been a nice sell. And this retracement here, it's really not enough to my liking. The high is 549, but it's not really enough for my liking. But it can still have that run lower and trade into that low. So we're trading at 544 now, 545. I want to see if it can get as high as 550s and 560s. So another reaction here lower after running into 549 high. We're trading down at 540s. So let's see if it will have that 530 level. So from 540 to 530 is a 10 points, 10-point run into that sell side. The time is 8:56. London is gonna open up in the next 4 minutes or so. And then we're gonna see if it wants to round that sell side, and I want to see a sharp move into that sell side. We're trading at 539. You can see the wick here. We're going to it. So if it gets back to that 550 level, if it at all it does that, then we'll be selling that 550. But it's been just lower pricing, pricing lower, lower pricing, lower pricing. And what really be surprising to me if we run that low now, even before London opens. So that's a nice rejection. We're trading at 536. We're only remaining with 5 points to that 530. You can see the weakness here. It's just absolutely good, good. So you can see the 15-minute here. Took out yesterday's high here, and now we're trading lower. Beautiful run lower. So London is coming in less than a minute now. So there we go. There we go. There we have London. So I want to see it smash through that sell side. So look at the 15-minute here. Look at where it has closed. So with this reaction here, we don't have any huge wick here. So this is this weakness, and we can have just small retracement here, just like we've done. This candlestick high has retraced to 541, and now I want to see it on that sell side. So it will be very crazy if we do not take that low out, and maybe just starts to retrace from here. It will be so wild if it does that. So all it will just be suggesting is we have relative equal lows here, and we can run that at a later time. So if you look at this candlestick here with the lower pricing, there hasn't been much retracement, and there's no candlestick here closing above the other. There's no candlestick here closing above the other. All candlesticks are down close. I mean, majority of them are down close, but the up close candlestick here do not trade through the full range of the previous candlestick. If you can notice this in this momentum here. So it can as well happen with this candlestick here. We can have this retracement here, but it cannot go above the previous high. So this is London Open, very small wick here, the tail, and then now it's in this candlestick here having a retracement. So we've touched 543. And it's still pushing. Look at that. So I want to see it trade to that price point here. That's around 550, 555. This level was 553. And then we can go gonna go in on a short. So this candlestick's high is 551. So this is the first candlestick that has closed above the previous candlestick. So this retracement here can be still be held around here before it starts again to trade into that sell side, or it can just run lower into that sell side direct. And you can see the reaction here. So we went back into 550. The high is 551, and now we're trading at 542. So we're right there at 556 again. So I wanted to see it at least trade into this level here, that 553 level. So the macro here is 550 comes in, we have an up close, 555 trades higher, and now we have 9 here. This London open retraces higher, and now we have that 905 candlestick here. Normally I would stay here around, we have this macro here, and then call it a session. But I want to see if we have that retracement back into the midpoint of this week here, then I might be getting in a short to try and aim for that, for the direction of that sell side. This is what happens when you completely trust that price is going to run into a sell side liquidity pool, and it doesn't. I mean, that's how price behaves. Those are the behaviors of price. Initially, you want to be recognizing where price can trade to, and we have that sell side. It's not a must your exit um, becomes in that level of that sell side, but you can see we've had a nice move lower in the direction of that sell side. Initially I talked about this low here, we went to it, and now I talked about how I wanted to see price close on the lower portion of this wick here. It did not do it on this candlestick here, but in my mind I knew that we're going to be trading in that there in this direction here. Eventually we'll take that sell side because these are relatively cool lows, and these here are never left untraded too. But I wanted to see price close on the lower portion of this inefficiency, and it closed right here, and then I completely 100% I'm rooting for price to trade into that sell side. So this is the kind of retracement that I wanted to see, but I wanted to see it come back to that price point here, and then we can get in a short after it has done all this. So we've closed that 905 right there. So I still can expect that price point. If it does not trade to this price point, then I'm not gonna do anything. We're gonna call that a session. So it's so close to that level. So let's get ready. I want to be using 0 point. Yeah, we'll see whether we'll get that entry. So it doesn't properly gotten into that level the way I want to see it. So that's it. I'm gonna in on a short. So we've sold 553, exactly the midpoint of that week. So we went through it. We've seen the reaction here, started trading below it, and now we've gone to that level. So I'm expecting that week to act as a premium array, and now we can start trading lower. Let's see the trade level here. Yeah. So from 553, 20 points we can do 543 and then 533 and 533 is right here. That's the best it can do. So I've used 53. From 53 we can take it out at even the 10 point. 10 points at 43 and 43 just here. So I'm expecting weakness, and we see whether we can attack this sell side. So far a nice rejection from that price point. So let's watch and see, does it have the ability to trade through this price point here and head it to this lower. Well, this is 10 points in. We're trading at 543 now. Beautiful reaction. Beautiful run lower. And now we can have our 10 points. There we go. So these are how many points are these? From 553 to 540. This is I've taken right there at 540 because we can have a deeper retracement and I don't want to be part of that. And there's a reason why I used 1.2. It's just to get a 10 points out of that run here. And that represents a 20-point run if I could have been using my normal 0.1. And you can see the reaction there. See that? So from 553 to 540, that's 13 points. I mean, that's enough. And now we are trading on this discount here. And I do not really want to anticipate and see this kind of retracement. So if you look at this 15-minute chart, we've had this huge wick here, the one that I've been selling short from 554. Eventually you can go below this low here. And just because price has done this, all of this back and forth price action here, that's why I was aiming for the 10 points. So one short on this price point here, I don't really anticipate price to start trading into this week. If we're going to be a lot weak and going to be trading into that sell side, I don't want to see it trading to this week, but you can see it's pressing higher now. So I know at some point that sell side is going to be taken out. That one I know 100%. And look at that retracement. Back up into that 550 again. So one shot at 553 at the high of that candlestick, got a very nice reaction here. But this kind of retracement here, just not really my cup of tea. So I'm waiting for this candlestick here to close and maybe wait for on another one. If we have a deeper retracement here that goes on the proportion of that week, that will be it. But today we've had a very nice run momentum. So I've explained why I took out that price at 10 points is because that trade at 10 points, and it's because I had a 0.2. Initially I trade with 0.1, but I wanted to get the 10 points but with a lot of 0.2, so there's 20 points with the 0.1, killing two birds with one stone. So got 13 points out of that reaction lower, and now we are back into that price point. So that this the kind of retracement that I did not really anticipate to weather. So it has gotten back to that price point. You can see the reaction here again. So now that we've had this run here, this drop here, it's going to be difficult for people who are trading London. First, I want to see this sales idea being taken out. So you can see the retracement back into that level, and it's dropping still. So this candlestick here was not supposed to behave the way it did here. It just had to open and then run after that sell side. So you can see the retracement back into this high is 554.9. And now let's see whether that sell side here will be ran. So we've opened up this next candlestick. If this candlestick here trades above that midpoint here and closes, then that will be it for me. If we close above the midpoint of that inefficiency, that premium week on the closing basis, then we'll be done. So as long as it keeps price on the lower part of that inefficiency here, I want to see it trade down and attack that sell side. So we've traded again higher, taken out these relative equal highs here. And that's not something that I would really anticipate for my trade. So we failed to take out this sell side here. We started running higher, and you can see the run up into this area here. So this candlestick here is has gone up to 561. So we traded up to 561 here, and now it's back down. We've not closed with this candlestick here. It has not yet closed. So if I were to be still on that 554 trade, 553 sell, then I could be anticipating for this candlestick here to close. And if it did close on the upper portion of this candlestick here, that premium array, then that will not be well with me. So due to this reaction here, this retracement here, all I want to see is lower pricing now. So we're 21 minutes into London, and we're still waiting to see what this candlestick here closes in the next 3 minutes or so. So sometimes you gotta camouflage with price. You gotta do what it does. If you go to Rome, you do what the Romans do. And if you come in front of these charts here, you don't do what you think you're gonna do. And that's the good thing with the experience. You do what price does, and that's literally what makes money. And that's really it. So we're remaining with less than a minute now. And we're gonna be looking at where we closed here. So trading at 552. We made this high at 561. So from where I was selling at 553, that's a 7-point drawdown. 7-point drawdown. So look at that reaction there. It's beautiful, right? And look at that close there. So we've not yet closed on the upper portion of this inefficiency. So what do? We wait, and in the process of waiting, see this premium wick here. I want to see price avoid it completely and just start trading lower now. So these are relatively equal, too smooth. Anybody who's coming in London right now to trade London, I mean, if they're an ICT trader, then we are aiming for this sell side. And if they've been in front of price from the midnight New York Open, then they're definitely looking at that week and that inefficiency and that. While people are trading, I don't know, retail stuff, they're expecting price to trade into that low and start trading higher. But I'm expecting price to trade to that low and trade a lot more lower. So we've traded back into this price point here, that PDRA. We've not closed on the upper portion of that midpoint, and now I want to see it start to trade lower. So I'm looking at how price is going to react to the midpoint of that week right here. So I've mentioned this premium week. I don't want to see price have an interest to trade into that. This should be like a place where it should not trade to. If it does, at all, if it does, then I'm completely wrong on that idea. Then we're going to be running that sell side at a later time. But we're going to also see the reaction from that level there, that 553 level. Nice. Look at that drop. Beautiful, right? So we're trading down at 542 now. So from 553 there, beautiful run lower. Now where is it headed? Sell side. So this what I anticipated. I expected price to do this. Everything that's done here, I anticipated price to do it, except the fact that I sold here and I wanted to see it reach into this sell side. But we've had another retracement. But you can see the reaction and the run lower from that price point there. It's just so nice. It's exciting. And I've talked about what is gonna do with that week here. We've not traded into that week, not a lot really. But then you can see the reaction from that premium array, and you can see the push down. So from that 553 level, you can look at we're trading at 540s now. So I want to see price head into that sell side. So this has been almost 2 hours now. And look at that trend lower. It's something. It's something else, bro. It's a beautiful run lower. Beautiful. If you are in this trade here, you enjoy it. You enjoy it. So we met the low here at 533 even. So if I were to be in that 533, these are 20 points right there. So the 7 points that got off just for the fear of this retracement here, there we go. You have it right there. So honestly, devour that sell side. Anybody's trading retail that expecting price to go into that low and bounce back, start trade higher, it's not going to do that because it has already done that here. You can see the run lower, so close to that low here. So what do we have here again? Relative equal lows. So I want to see it attack that sell side. So we've opened up a new 15-minute candlestick, a new 5-minute, and you can see the wick here on the 15-minute. This is the same concept that I've talked about here. I don't want to see price start to devour this wick here. I want to see it keep lower prices at bay and attack this sell side first. This has been nice, a very beautiful decline here. A better price could have been that 55 to 60 level on the upper portion of this range here. If you got it at 55, 45 and 35 would have been a fill for 20 points on this run lower. So we're having a very difficult time here trying to trade back and forth. But we've seen the lower pricing here. Pre-London from the midnight New York opening price, we traded lower. We did not make any reference to that inefficiency. We traded through that week here. I've talked about all of this narrative. Trading back into this week here, trading lower. We had this retracement here, and then now we're down here. So we made a run to that 535 level. I don't want to be in here, staying here a lot, but that sell side is the final destination for this price action. So this has been nice today. Again, another profitable session. This price point here is still of high impact, and we've seen the decline there for 20 points from that 555 level. So I don't want to stay here a lot. I'll be looking at price still. So that's really it for today. The session is my session is up. Until we look at price again next time. Adios.